Hey everyone, welcome back to Corporate Decoder. Today ISLUF just filed a Form 8K and I'm seeing one red flag that really matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about a business combination agreement and it looks like they are pushing the deadline back again. So let's dive into what this means for ISRL Acquisitions Corp. This is essentially a company that is aiming to merge with another business and they've been working on this for a while. The main point of this filing is an amendment to a business combination agreement with a company called Gadfin Ltd. This is the 7th amendment to their agreement, and it primarily serves to extend the termination date of the deal. They've pushed the deadline back by just a few days, from the 15th of June to the 20th of June of 2026. Now, why is this important? When companies that are aiming to combine keep extending deadlines, it can sometimes signal that they are having trouble finalizing the deal. This partnership has been in the works for a long time with multiple amendments and previous filings. It started back in January of 2025. That is a lot of extensions and amendments, suggesting that getting all the pieces in place for this merger has been a complex process. The company's securities are related to units, common class of shares, and redeemable warrants. These are the different pieces that make up an investment in the company. The Class A ordinary shares are the core ownership in the company, and the warrants give holders the right to buy shares at a specific price in the future. ISRL Acquisitions Corp is listed as an emerging growth company. This means they have certain regulatory leeway, like being able to delay adopting new accounting standards. Now, let's look at the signature. Ziv Elul, who is the Chief Executive Officer and a Director, signed this. This indicates that the company's leadership is aware of and authorizing this amendment. The core of this filing falls under Item 1.01, which deals with entering into a material definitive agreement. In this case, it is the 7th amendment to their business combination agreement. They are also highlighting that the details are in an attached exhibit, Exhibit 2.8. This is standard practice for these filings. The actual amendment document is usually provided separately. This exhibit is the actual amendment itself. While we don't have the full text here in this summary, knowing it is attached is important. The fact that they needed a 7th amendment also points to the ongoing complexities of bringing this deal to fruition. This section lists all the exhibits attached to the filing. We can see all the previous amendments to the business combination agreement listed here, showing the history of these changes. There is a legal note here stating that some exhibits and schedules have been left out, which is allowed under certain regulations. The company agrees to provide them if the SEC requests them. Now, looking at this from a broader perspective, these continuous extensions aren't always a good sign. Think about it like planning a big event if you keep having to push the date back. It means there are problems and you are not sure when you can actually have it. For companies like ISRL Acquisitions Corp, which have a limited time frame to complete a merger once they go public, these extensions can put them under pressure. If they fail to complete a business combination within the specified period, they might have to liquidate. For instance, similar situations have played out with other special purpose acquisition companies or SPACs. When they struggle to find and close a deal within their allotted time, it often leads to a payout of the money held in trust to shareholders and the company essentially dissolving. Companies like, say, Foremost Acquisition Corp. 3 saw their merger deadline extensions lead to a liquidation situation. Historical data shows that for SPACs that have to repeatedly extend their closing dates, the odds of a successful merger diminish. Investors often see a significant drawdown in share prices as uncertainty grows. A hypothetical $1,000 investment in a SPAC facing repeated deadline extensions could see its value drop by 50% or more as the liquidation deadline approaches. In this case, the extension is very short, just a few days. This might mean they are very close to finalizing things, or it could be a temporary pause to resolve a final sticking point. It is a small breather to try and get the deal done. My biggest concern is the repeated need for amendments and extensions. While it is common for complex deals to need adjustments, 7 amendments by June of 2026 on an agreement that started in January 2025 suggest there are significant challenges being addressed. I'm watching to see if the 20th of June deadline will be met, or if more extensions are on the horizon. What I'm actually looking for is a definitive timeline and a clear path to closing this business combination. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.